The only place where success comes before work is in the dictionary. Vidal Sassoon. Guys, we have enrollment underway for our Accelerated Market Mastery course. Look in your show notes for more information. Look at these markets. Everything up for the day on our 4 big charts. On our other 3 charts, Bitcoin, real estate, and oil. The only thing down, real estate, and not down much. It is a crazy world, my friends, and gets crazier by the day, doesn't it? But these charts continue to just be amazing. Let's start off with the weekly chart and the S&P 500. What do we see happening here? Well, as we zoom in, we can see that the new weekly chart is starting off actually below our weekly trend line and actually moving up a little during the day to sort of capture part of it. But you can see the weakening process, can't you? You can see how we had the weekly vertical crossover back on the week ending the 8th of May. And then for 4 weeks surging up, actually reaching the high on the week where it started showing some weakness. That was on the week ending the 12th of June. And then last week, we ended the week with a red spinning top, a solid red spinning top. Lots of indecision tending down. And then starting this week with a green up candle, but again, lots of weakness having blown through the weekly trend line. So derivative oscillator still positive, losing momentum. Price percent oscillator has, again, the real weakening occurred where we had that first red open box candle. And we've seen it continue on. Now it's still moving up, and look, it pushed through the 200 period moving average line. So it's topped and now sliding sideways. Is it going to gain energy and pop up again? Well, what does a 2-day chart show us? We've been waiting to see if that 2-day chart's going to cross over going down. Did not manage to do so on Monday. And again, this wraps up the latest 2-day candle. It represents Monday and Friday. It is again another weak candle after a green up candle previously and 2 prior down candles, solid red down candles. So what we're seeing again is that sideways slide. Price is just above the weekly. It blew through the 2-day, and we don't really have a new 2-day trend line that we can draw for you. And we look at the half-day chart. And of course, we don't really have much of an ability to draw any kind of decent 4-hour chart. So what do we see? We see it passing through the weekly. So you see penetrations of the weekly trend line on the weekly chart and the 4-hour, well, the half-day as we're calling it now. Price percent oscillator still heading down, derivative oscillator negative on that chart. 2-day chart, derivative oscillators popped over to negative, but the price percent oscillator is still positive. So we're seeing more and more weakening with a sideways slide. Now, could the market get up some energy and more speed? It could. What could it also do? Rotate over, going down. Is this the bull trap getting ready to spring? Don't know, my friends. That's why we have weekly vertical crossovers, isn't it? So we'll continue to watch, see what there is to see there. Now, we don't see as much weakness in the tech stocks. We had a slow week last week with some devolvement, but look at how the first day of the latest weekly candle has moved up. Price percent oscillator still moving up nicely. Derivative oscillator losing some momentum. But prices above the weekly trend line, it's just hard to really even, well, it's not a bad point there. And again, we can see where the price is above that. We go to the 2-day, and again, it's about flat, not heading down like it was before. And again, haven't reached the high we reached was back on Wednesday the 10th. That was 247.82. How high were we? 247. So that's not too bad on Monday. I'm sorry, that was for Monday and Friday. So that's good. Prices above the 2-day trend line. Prices above the weekly on that 2-day chart. Half-day chart up in the morning. The real gain was in the afternoon, bouncing off the red signal line on the 4-hour chart. So the Qs is looking pretty decent. It's really that S&P that's showing us a good bit of weakness. We move on to 20-year bonds. Now, they had a weekly vertical crossover going down back on the week ending the 22nd of May. They were down for 2 weeks and then started sliding sideways and moving up. As we start the week, we can see that the Heikin Ashi candlesticks pushing through the weekly and the 2-day trend lines. Price percent oscillator still heading down at the same angle it's been heading down for going on 3 weeks now. Derivative oscillator negative, losing downward momentum. But that weekly price percent oscillator still heading down. 2-day heading up. Now the 2-day peaked in its upward movement back on Friday the 12th. And then we've seen a red spinning top, doji, and the latest one that we see having formed is a green up candle, a long wick on the top, a little wick on the bottom, sitting right there at the 2-day and the weekly trend line. Hasn't crossed over going up yet, but again showing us definite signs of weakness in that weekly down move, that down move continuing on the weekly vertical crossover. 4-hour chart's been going up for several days now, up in the morning, a little bit of a tapering off in the afternoon. TLT up just barely 0.01% for the day. So again, keep your eye on the 4-hour chart. Will it cross back over going down? Maybe give you the weakest of all of our entry points, but a 4-hour crossover might. That 2-day is mighty weak as far as continuation, but it could. I'm talking about as far as a down movement goes after the power of that weekly vertical crossover for 2 weeks. We leave 20-year bonds. We go to gold. Look at gold. We see that price percent oscillator is just laminated right on the red signal line. Starts off with a big green up candle for the week. This is just the first day, but look at it moving up 0.65%. Derivative oscillator still barely holding on to some negativity. Are we going to see this thing bounce off, or is gold just messing with us? We'll know as the week progresses. That 2-day chart, price percent oscillator angling up, derivative oscillator losing lots of downward momentum. Latest candle, big, decent-sized green up candle pushing through the Bollinger Band. See how those tightened up after that weekly vertical crossover. This may be one that fails us. We're waiting to see what is going to happen on that, but it is continuing to weaken in the down move. And we see where for 2 days now we have had strong up movement, up on Friday, up Monday morning, a little bit of a pairing off Monday afternoon, but that price percent oscillator on the half-day chart spiking up along with the derivative oscillator. So we'll continue to watch, see what there is to see. We can rotate over the 4-hour trend line. And again, seeing a lot of weakness in that down move on gold. It may be a loser. We'll continue to watch, see what there is to see there. Folks, thank you for all your orders. As I told you last week, we sold out of all of the first printing of the second edition of Charting Your Way to Wealth. And the next round is being printed now of printing 2 of the second edition. We'll be getting all those out. Appreciate all those orders. Still finishing up interviews for folks who want to take our Accelerated Market Mastery course, 3 months intensive training. All that we have to teach you on mastering the charts, options, mastering options, the Charting Wealth way, and helping you think about, theorize on, put together, and practice your own virtual mini hedge fund, as we call it. We call it your personal wealth fund. We want you in that course with us. If you are interested, I interview everyone personally. It takes about 30 minutes. And make sure they are right for the course. Just email us cw@chartingwealth.com. The program starts about mid-July, and we are finishing up the interviews soon. And as soon as the course fills up, we're full, and there is no one else added. So if you think you're interested, let us hear from you. cw@chartingwealth.com. Let's jump into Bitcoin, up for the day 1.04%. What does a weekly chart show us in Bitcoin? A sideways slide. Bitcoin ended at $9,463.54. Its high was reached all the way back on the week ending the 8th of May at $9,978. So it's really been sliding sideways since then. Look at that price percent oscillator flat. Derivative oscillator is losing upward momentum. Go to the 2-day chart. Of course, it crossed over going down back on Tuesday the 16th. And all we have is little green candles forming since then. We'll need a 2-day recross for you to have any opportunity to jump in and practice trade that, which we hope you'll do if that occurs. 4-hour chart's trying to cross over. Looks like it did at the end of the day. And we'll continue to keep an eye on Bitcoin, see what it does. The only downer for the day is the Vanguard Real Estate Investment Trust Exchange Traded Fund. Down just a little bit, 0.10%. We had the weekly vertical crossover on real estate back on the week ending the 29th of May. Then it was up for 2 weeks, and we're going into the second week of what looks like sort of a devolvement, a slowdown, derivative oscillator losing momentum. Price percent oscillator, we're going to continue to keep an eye on that. That's where we are on the weekly. 2-day, heading down, sideways slide. This latest 2-day candle, red down candle with a wick on the bottom, little wick on top. Price percent oscillator losing energy. Still positive though, derivative oscillator losing energy. Half-day chart, of course, just continuing to trundle down. So keep an eye on real estate. What are you waiting for on real estate? Well, you're waiting to see, again, what happens on that 2-day chart. And does it cross over going down or not? And do you see that 4-hour chart gain some energy and give you some hope of continued up movement? Lastly, we go to USO, which is United States Oil Fund. Hey, I'm had some suggestions on other candidates to go to on oil funds that we might track. Of course, we originally did OIL, which was trackable. OIL closed. Why? Because of all the problems with oil. They actually called the fund and closed it. But if you have recommendations, if you're interested in oil and want me to look at tracking something else, would you put that in the YouTube notes or in your comments, or email me cw@chartingwealth.com. This is just not a fund that is real trackable, and I would like a good one. We've only seen a few decent moves on the weekly vertical cross. See, that's not a weekly vertical crossover chart we like. What is? I don't know, something like the Qs, where you've got clean moves that you can trust. See how clean that is, as opposed to something that is, and this is what we train for, we talk about, we discuss in our accelerated market mastery courses and such. When you go and you backtrack to figure out if a stock or ETF you're interested in is something you can actually practice trade. Very hard when you have a year's worth of movement or so, or 6 or 8 months, where there's just nothing possible to even track because it slides sideways so crappy, and you just don't have enough from your lagging indicator, which is our primary indicator, which is the price percent oscillator, to help you out. But what do we see oil trying to do? Well, it's trying to cross over going up. It is trying. Is it going to manage to do that by the end of the week? It might. But again, not a great deal of movement as far as the candlestick goes. But if you pay attention to what's happening percentage-wise, up 2.66%, that's just for the day. That's pretty good. Look at the 2-day chart. We see second candle moving up, trying to peak up and continue that up movement. Derivative oscillator still losing a little momentum. Looks like it's sort of flattening out. Price percent oscillator trying to penetrate that 200 period moving average line. We go to the half-day chart and we see it crossing over going up back on Friday afternoon as things moved up, and of course strong up in the morning on Monday and in the afternoon, up 2.66%. So mark your daily market worksheets, pay attention. May have a weekly vertical crossover going up in oil. That would be nice, wouldn't it? That's where we are, folks, as we end the day on Monday. Again, Accelerated Market Mastery. Like to hear from you if you're interested in that. If you want to buy the book, follow the link in the show notes. If you live overseas, you can't buy the book with our Square account. For some reason, they don't clear overseas credit cards. But if you'll email me, cw@chartingwealth.com, we'll get you a PayPal invoice out, mail your book to you wherever you are in the world. We've sent them everywhere. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.